From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 21st, 2015. In a moment, we'll be taking a look at the USDCAD, the US dollar versus Canadian dollar, for today's analysis. But first, I want to recap a couple of the trade suggestions made late last week and over the past couple of days. First off, starting here on the GBPUSD, Greater British Pound versus the US dollar. Of course, we've been studying the downtrend and the opportunities to sell within the downtrend and the momentum that began after last week's FOMC news that we saw out of the US. Taking on down here to the 4-hour chart, you can see the market moving lower, much lower, over the past several days. We can see it pushing all the way down here towards the 4,900 level. Currently, we're just kind of hovering around that 4,900 level, a little bit above it, a little bit below it, but just kind of hovering around down here. You can see the resistance very close to the 1.4920 level, the bottom of that orange shaded area, and we can see that continuing to hold today. And support right around 4890, just underneath the 4,900 level. You can see that barrier of support right there. So what we're looking for today is either continued resistance 4920 or the breakdown underneath 4890 and the continuation of the downward momentum. Forex Black Book now supporting that direction as well. So that's the direction we're going to focus in on for the pound dollar today. Risk is that it breaks back above 49.50 and starts to move its way back higher. A few trades still going from last week down here on the trade window. US franc, we've been holding this currency pair for several days now. Take it on down to the 4-hour time frame. We started buying this currency pair all the way down here at the green shaded area. Held it over the weekend, of course. The market came down to the blue shaded area into the 9,900 level. Found support once again. Let's go ahead and zoom in a couple of times here. You can see it finding support there just into this blue shaded area above the 9,900 level. So that's pretty much the same focus that we would have today. We want to see it stay above 9,900 and continue pressure back up towards the parity level, the pink shaded area at the very top of the chart. So focus on buying this currency pair, targeting 1.0. The risk in that scenario, of course, is that it breaks underneath the blue zone, breaks underneath 9,900, and we start to see it work its way back down here towards the green zone into the low 98. So that's the same scenario for this week, just like it was last week, and that's the US franc trade that we've been holding for several days. A couple of other trades. Australian dollar, of course, we've been looking at selling opportunities here on this pair since late last week. Currently sitting with about 13 pips of profit on the trade. Haven't seen too much more than that, maybe a little bit more than that. We've studied the red triangle pattern. We've studied the blue trend line downward angle within the triangle. Now we're in the green zone. The question, or the green trend line, the question is, are we going to see the breakout of the red triangle and the continuation of the downtrend? Or are we going to see this turn around and go back up? 4-hour time frame, you can see right now, 71.65 to 71.90 holding as our resistance zone. That's the focus we have right now, and looking for that to continue and pressure back down here towards the 7100 level as our target at the very bottom of the chart, where the blue shaded area is and the bottom of the long-term triangle. The risk in that scenario, of course, is that it breaks above the orange zone, 7190, 7200, and starts to work its way back up again. So still holding that. We'll look to protect profit if we see another, 8, 9, 10 pips out of it to the downside. We'll look to move our stops to break even or better and begin protecting profit, targeting down towards 7100. And lastly, NZD/USD. This is another currency pair we've been looking at selling opportunities into resistance. I'm just going to go ahead and take it down here to the 4-hour chart. Take a look at that pink shaded area there on the top part of the chart. That is 67.40 to 67.60. It's currently holding as our resistance zone. We came off the high, broke under the pink zone, touched the orange zone, came back up, challenged resistance like it did back here on the left. We're looking for a fall, staying underneath the pink shaded area, takes a turn back down here towards the orange shaded area, which is down towards the 6700 or into the 6600s. The risk in this scenario, of course, is that it breaks back above the pink zone and targets back towards the blue shaded area at the top of the range for the New Zealand dollar. Okay, moving on over here to the USDCAD, the US dollar versus the Canadian dollar. As we move over here, it's clear that this currency pair has been in an uptrend. We've been looking at an uptrend for many weeks here. Actually, a couple of years we've been in an uptrend for this currency pair. We're capping out all the way at the very top of the trend. You think about buy low and sell high. It becomes a very difficult scenario to buy it at the very top of the trend, but that's nothing really telling us that the trend is changing, nothing telling us that there's any reversal really happening here for this currency pair. So that still remains the direction we want to focus in, because nothing is telling us that the trend is changing. So if we're going to buy it in the direction of the trend, we either want to wait for one of two things. It either dips to support or breaks above resistance. Can't really see that really well here on the daily time frame. But if we take it down here to the 4-hour time frame, it becomes much more clear of what the pattern of the trend has been. If you go down to the bottom left-hand side of the chart, you see the red circle down here with a blue shaded area is the bottom left. You saw resistance, congestion, a breakout, and then a continuation higher. Then you saw congestion here at the yellow shaded area, the second red circle. It finally broke out, went higher. Then congestion here at the pink shaded area. Same situation where it found resistance at the top around 37.40, support around 36.85, eventually breaking out, continuing. Found a little resistance here at the orange zone, not quite the same congestion you saw at these last three, but a little resistance there, the breakout, the continuation. Now we're back into congestion again. The green shaded area, the very top right hand corner of the chart, the red circle, we're in that congestion zone again. So if you're going to follow the pattern of the trend, it makes much more sense to either wait for a dip to support, which at this point would be the bottom of the green shaded area, 39.18, or the breakout above the green shaded area looks for the continuation, just like the rest of the pattern of the trend has been. 39.75, 1.3975 is the top of that green shaded area. Let's zoom it in one more time here so we can really get a handle on that. So if you're going to follow the pattern of the trend, just like down here at the pink zone, buying the bottom or a breakout above the pink zone was the opportunity to go higher. So the same opportunities arise today for the USCAD. Buying the bottom, 39.18. The risk, of course, the risk is pretty clear that it breaks out underneath and goes lower. And you look for it to break out above 39.75 and continue higher. I have the next resistance zone that we studied back in time in the trade room last week, all the way back up here into 1.4070. So we're looking on a break of the green zone at a potential 100 pip run towards the blue shaded area. And again, the risk is the breakout under the green zone. I, again, would expect that we're looking for a breakout, open and close, single candle body here on the 4-hour or even on the daily time frame. Outside this green zone gives us higher confidence in direction. But again, we can't argue with the direction of the pattern of the trend. It's definitely up. There's nothing really telling us yet that we're looking at a change of that. A breakout of this green zone is an opportunity. Buying on a dip to the bottom of the green zone, which it's not there now, becomes an opportunity for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.